Welcome back. Welcome back to another lesson in the study of success. Today, I am going to talk about something that is kind of random. You ever see that movie, A Beautiful Mind, with Russell Crowe? And he played the character of this mathematician named John Nash, I think it was. Very smart guy. But he had some issues. Some people will call him crazy. But you remember in the movie how he would start seeing and writing all these different formulas and equations, and it was like he couldn't shut his mind off. Outside of the paranoia, schizophrenia, and I believe he had multiple personalities. Outside of that piece, I draw that allusion to that movie because sometimes when I'm working with businesses, that's what happens to me. I just start seeing all of these creative solutions and answers to problems and questions that have been brought up. And it's like, it's such an adrenaline rush when that happens. So today I'm going to talk about just 5 different concepts that it just randomly came to me that I thought I might want to share. But before I get started, let me give a word from our sponsor. This video is sponsored by Fellow Accounting Solutions, where we offer premium bookkeeping, payroll, and tax preparation services at affordable rates. Let's see how we can service you. Send us an email with your contact information and get a free consultation. So today, I'm going to talk about 5 random finance concepts. Some of them you might know, some of them you might not know. Some of them may give you a different perspective on looking at things. Number 1, retirement. Most people save for retirement because that's what they were taught to do. Save for retirement. I realized maybe a few years ago, retirement is not based off of savings. Retirement, or your ability to retire, is based off of passive income. Once you are able to generate enough income passively, which means without even getting out your bed to pay your monthly expenses, plus a little over for lifestyle and just living, that's retirement ready or retirement eligible. So kind of get out your head that you got to have savings for retirement. No, what you need is passive income. Focus on generating passive income, and then you can retire when you've hit that number that would allow you to live the way you want to. Number 2, reverse engineer the business model. You see all of these businesses out here, all these corporations that work, they've been around for decades and some 100 years or so. Reverse engineer their model. Depending on the size of the business, obviously, the bigger the business, the more complex the model. But they all have something in common, something generally that you can accept and adopt and create. When I say create, I mean for you take what is already out there and make it your own. I learned that when I first became a director of finance for a large department in a local municipality. I was overwhelmed by the enormous size of my budget. At that time, it was around 170 million. And I didn't know how I was going to be able to operate and control such a huge number. Well, after a couple of years of doing it, the first 2 years were very stressful. But after doing it well, I realized something, that every business has the same fundamental principles. And then I realized that I can run a small business, and actually smaller businesses take more work, and I can run a multi-billion-dollar corporation. Why? It's because it's the same principles. And the reason why I say a smaller business takes more work is because you have to wear more hats. You actually have to do the work yourself. I came up through the ranks, which means that I started at the lower end and worked my way up to the top end. So I can actually do the work. In a large corporation, you have people doing the work for you. And that is a benefit. But moving right along, number 3, wealth. What does it mean to be wealthy or to be rich? Well, you could be wealthy and technically poor or low income. You can be high income and not be wealthy. Let me tell you why. Wealth is based off of your assets, what you own. Wealth is based off of your balance sheet, if you will. Remember, the balance sheet is your assets minus your liabilities equal your net worth. Well, wealth is based off of that financial report. Your income is what determines if you're rich or not. In America, they say if you're making over 300,000, you're rich. And that's on an annual basis. You have a lot of rich people who are not wealthy. It's actually easier to get rich than it is to become wealthy, because being wealthy means that you have to save that income or invest that income so that it can make you more assets, so it can give you more assets, because you actually have to own what it is that is providing your wealth. So you can, like rich people, or let's say wealthy people who are low income, that means that say they have $1 million or say $10 million in assets, and it's generating them, say, $50,000 a year in income. Now, of course, it's going to be generating more money than that, but your assets is creating income for you. So your income is actually pretty low compared to your wealth. Remember that wealth is balance sheet. Rich is profit and loss. Those are your two financial reports that you have to deal with. Number 4, good debt is better than no debt. And that's because of the power of leveraging. Some people teach that just get out of debt, get out of debt, get out of debt, no debt, don't have any debt. Well, that's bad debt, or that's consumer related debt. That's debt that whatever it is that you bought with it, it depreciates, and you have interest payments, so you don't have value there. Whereas good debt is something that makes you money. For example, people complain about their college student loans, which I have a bunch of myself. I don't worry about that, because my student loans created the ability for me to make way more than I could have made if I hadn't got the degrees that I got. So now, when thinking about student loans, the debt is only worth it if your debt is for a degree that can generate you income. If it's a degree that you can't have, that you don't have a market for, well, might wanna, there might be some bad debt. But in general, like a house could be good debt. Not if you live in it, but if you own it and rent it, because now that asset is making you money, or a commercial piece of property, or any type of investment like that. And that's the power of leveraging. When you take a small piece of your own money, $10,000, and you leverage it to get a $90,000 loan so that you have $100,000 in capital available to do something else with. And number 5, here's the last one, savings. Save your money, save your money, save your money. Saving your money is only useful if you're doing something with it. I mean, saving is only good if you use it as capital in order to go out and make you more money. Saving money just to have sitting in the bank, it does you no good unless there's an emergency. Then you get to burn through it, and you just hope that the emergency ends before you burn through all your savings. But then you got to start all over. If you save your money with the purpose of creating capital, a pool of capital that you can go and use to make you more money, to generate that passive income that we talked about. So if I save up $100,000, I'm going to take that $100,000 and I'm going to invest it in a vehicle that's going to pay me $10,000 a year for the rest of my life. Now that money is doing something, that savings is doing something, is providing me income, and I'm using it to leverage. So those are the 5 random finance concepts that I wanted to share with you, and I hope that you found them useful. Maybe it changed your mind on the way you might look at some of these items. So if you did find the video useful, the lesson in success, go ahead and hit that thumbs up. Don't forget to hit the subscribe and the notification bell. I'll be uploading new videos related around success and business and finance and all those wonderful things that provides keys to the doorway of the good life. So until the next time, I'll see you in the good life.